Hi everyone, welcome to the Decentrader sessions. My name is Philip Swift, and in each of these sessions myself and Phil B share our Bitcoin and crypto analysis. Today I'm going to be sharing a brilliantly simple valuation model and explain how it works and what it's telling us about where Bitcoin may go next. Now, before I get started, I need to state that I'm not a financial advisor. I've never wanted to be one, and I likely never will be. So this video is for educational purposes only. I'm a Bitcoin investor and trader who builds valuation models and enjoys sharing them with regular investors. So if you're here at Decentrader channel for the first time, then welcome. We provide the best educational content for both crypto traders and investors. So if that is something you think you can benefit from, then you can become a member of our channel by hitting the subscribe button below and turning on the notifications. That way you'll never miss another Decentrader video. Please also hit the like button, as it really helps us more than you can imagine. You can also leave a comment or question in the comment section below and I'll reply to you. So on to the indicator. As this is the first indicator video session I'm sharing, I'm going to show you what is arguably one of the simplest but also highly effective valuation models for Bitcoin. It's one I built myself, and it is available to view on the live charts section of the Decentrader website. And it is called, you can see it's the first one here, the Bitcoin Investor Tool 2-Year Moving Average Multiplier. Now, I know that sounds like a bit of a mouthful, but by the end of this video, you'll understand why it has that name. So this tool is intended to be used as a long-term investment tool. Okay, so it's not for short-term traders trading hourly timeframes or anything like that. This is a macro valuation model that is helping long-term investors and also traders to help understand where the market is heading. It highlights periods where buying Bitcoin or selling Bitcoin during those times would have produced you outsized returns as an investor. And to do this, it uses a moving average line, which is the 2-year moving average, this green line you can see here, throughout Bitcoin's history. And then it also uses a multiplication of the values of that line. And in this instance, we're using the 2-year moving average times 5. So it is taking the dollar values of the 2-year moving average and multiplying them by 5 to give us this upper boundary, the red line you can see here. So just to make that point, you can see if we go down to March 2013, when the value of the 2-year moving average line was at $10, if we move to the same date on the upper boundary, the times 5 multiple, you can see that value there is $50. Yeah, so we are literally multiplying by 5 the values of the 2-year moving average line here, the green line, to get to this red line here. And the reason why we do this is because as Bitcoin is adopted, it is going through this adoption curve here. You can see a broad arc shape moving up across the chart. And as it goes through that adoption process, we go through market cycles where participants in the market get overexcited or get overly pessimistic. Yeah, and the beauty of this valuation model is that we're able to highlight those periods where the market is overexcited, when price breaches the times 5 multiple line, the red line, and we're also able to highlight periods where the market is overly bearish, overly cautious. And that's when price dips back down below the 2-year moving average line you can see here. So how is this useful for us as investors, as Bitcoin investors, and even traders to some extent? Well, we can quite simply employ a strategy where we wait to allocate our capital when price drops below the 2-year moving average line. So it enters the green zone you can see here. So if we take the last market cycle as an example, so 2015 to 2017, we can see this indicator told us that actually it would be a good time to allocate capital when we were in the depths of the bear market throughout January to October 2015, when the price of Bitcoin was between $250 or a little lower, $220, and around $450. So you can imagine if you'd employed, or one had employed, a strategy of dollar cost averaging throughout this period, you'd have an average allocation of around $300, and then you would have held until price started breaching the upper red boundary, which is the ×5 multiple of the 2-year moving average. And you can see, if we zoom in here, that was when Bitcoin was around $10,000, $10,000, right up to the top. So again, if you had allocated a dollar cost average strategy of selling your Bitcoin here, then you'd have probably sold out over a couple of weeks at an average of around $16,000. So whilst this indicator doesn't try and help you to pick the absolute tops or the absolute bottoms of the market, it is very effective at allowing you to maximize gains for the whole cycle, because you're dollar cost averaging towards the bottom entering the market, and then dollar cost averaging out towards the top of the market. So let's have a look at some recent activity, see what this indicator is telling us. We can see that, as I just mentioned, the indicator told you to sell when Bitcoin was topping out the last bull cycle in late 2017, when price was just shy of $20,000. Since then, you can see it told us to not allocate more capital until we then crashed down below $6,000 back in late 2018. And it was telling us that this was a good time to dollar cost average in until we then broke out back above $6,000. Quite unusual price activity we've had over the last year or so was this area here where we had the plus token scam. So the Chinese altcoin scam, where the scammers were encouraging people to buy plus token, and because of that they were buying up Bitcoin, and that drove up the price artificially here in what should have probably been a continuation of the bear market. We know that the scammers then started to sell their Bitcoin, and then you can see price then sold off and dipped back down briefly below the 2-year moving average. And then we had the March COVID crash. And it's very interesting to me, this indicator, because during these times when price dips below this green line, the 2-year moving average, that is when sentiment in the market is at its most bearish. So during these times, we were seeing a lot of people on crypto Twitter get very bearish, and actually this indicator and other indicators I'll show you in the coming weeks were all signaling that actually that was a fantastic buy the dip opportunity. Since then, price has broken out, and we are now in the early stages of the bull market, and I'll show you in future videos other indicators that also confirm we are now in the early stages of the bull cycle. So where could we go with this indicator? Well, currently price is around $10,500. The upper boundary is currently just shy of $40,000. Now, what we can see in previous cycles is that as we enter the latter stages of the bull market, price tries to catch up with this upper boundary, and you can see that forces that moving average line to track upwards. And it's not until the blow off top stage, where price is starting to go parabolic, as you can see here, that price then breaches the boundary of the 2-year moving average ×5 multiple and goes parabolic before then crashing back down. So if we're currently at $40,000, the top of this range, I would expect price to try and catch up with that and probably finally breach it around the $80,000 level, perhaps a little bit lower. We'll just have to see how quickly price tries to catch up with it. But what it's telling us is that we clearly have quite a long way to go in this cycle. Now, obviously, I don't recommend using this tool in isolation. I use this as part of an overall strategy and one of many tools that I use to help me understand where Bitcoin may be going next. And as I mentioned, none of this is financial advice. So I hope you enjoyed this indicator. If you want to learn more about these types of indicators or this type of analysis, and in fact, if you want to learn more about trading Bitcoin, then head over to decentrader.com. The link's below, and you can learn more about the community that we have there. If you're looking to trade Bitcoin and want a reliable, secure, and easy to use exchange, then click Bybit, link below. And that's it from me today, guys. So hopefully I'll see you again soon. And if you have any questions, hit me up in the comments below. Thanks.